What if I told you that home prices were never, not even for a single second, going to come back down to where normal people could afford them? Not a conspiracy theory, not a hot take, just math, policy, and a market that was quietly engineered to work exactly the way it's working right now. Stick with me, because by the end of this video, you're going to see the whole picture, and you cannot unsee it. Okay, so let's set the scene. It's sometime in 2022. Interest rates are spiking, the housing market is finally starting to cool off, and every financial pundit, every real estate influencer, every guy at Thanksgiving dinner with a rental property is saying the same thing. Just wait, prices will come down, be patient, the market corrects itself. And millions of millennials, burned out, priced out, exhausted, held their breath and waited. They waited in 2022, they waited in 2023, they're still waiting in 2025. And here's the thing nobody wants to say out loud. The correction isn't coming. Not the one you need. Not the one that actually makes home ownership accessible to someone earning a median income in a median city. The conditions that would need to exist for that to happen, they were dismantled one policy decision at a time over the course of decades. This video is about why. Not to make you feel hopeless, I want to be really clear about that. This is a clarity video. Because the first step to solving any problem is actually understanding it, not the version that gets sold to you by people who benefit from your confusion. So let's get into it. Let's start at the foundation, literally. The reason home prices are where they are is not complicated if you strip away all the noise. It comes down to supply and demand. We have way more people who need housing than we have housing units available. That's it. That's the core engine. But here's where it gets interesting. That shortage didn't just happen, it was constructed slowly and deliberately through zoning laws, permitting processes, NIMBYism, and local political systems that were designed, whether intentionally or not, to keep new housing from being built. Think about it this way. In most American suburbs, and even in large cities, it is literally illegal to build anything other than a single-family home on the majority of residential land. Illegal. You want to build a duplex? Zoning says no. A small apartment building? Forget it. A mixed-use building where people can walk to work? Sir, this is a cul-de-sac. And who pushed for those zoning laws? Homeowners, people who already had theirs. Because when supply is constrained, the value of the thing you already own goes up. Your house becomes an investment. And nobody wants their investment to lose value, even if that investment makes it impossible for the next generation to afford a place to live. Here's a number that should make your jaw drop. The United States is estimated to be anywhere from 3 to 7 million housing units short of what's needed to house the current population. That's not a gap, that's a crater. And we've been underbuilding for over a decade. So when people say the market will correct, what they're actually saying is, I hope demand magically disappears. It won't. People still need places to live. All right, pause for a second, because I want you to actually feel this next part, not just hear it. In 1984, the year a lot of millennial parents were buying their first homes, the median home price in the United States was around $79,000. The median household income was about $22,000. That means a home cost roughly 3.5 times the annual household income. That was considered normal. That was the standard. That's what every financial planner used when they said, buy a house. It's a great investment. Fast forward to today. Median home price in the US is hovering around $420,000 to $430,000, depending on the month. Median household income is around $78,000. That's a ratio of more than 5 to 1. In high-demand cities like Austin, Denver, Miami, Seattle, that ratio blows past 7, 8, even 10 to 1. And wages didn't just fail to keep up, they were systematically kept down. Decades of stagnant minimum wage, erosion of union power, gig economy normalization, student debt loads that average over $37,000 per borrower. The financial foundation that previous generations built their homeownership on was quietly eaten away. And then the housing market was surprised that young people couldn't buy houses. Like, yeah, you took away the ladder and then asked why nobody's on the roof. This isn't about millennials being bad with money. This isn't about avocado toast, and if one more person brings up avocado toast, I'm going to need someone to talk me down.
This is about real wages versus real prices, and a gap that has been widening every single year since the early 1980s. Okay, here's where I want to slow down because this part makes people legitimately angry. And it should. After the 2008 financial crisis, a funny thing happened. Home prices crashed, which was devastating for millions of families who lost their homes, and Wall Street swooped in and started buying them at scale. Companies like Blackstone, Invitation Homes, and dozens of others started purchasing single-family homes by the thousands, sometimes entire neighborhoods at a time. They bought low, they rented them out. They turned the American dream of homeownership into a revenue stream.
And before you say, well, that's just a small percentage of the market, yes and no. Institutional investors own somewhere between 3 and 5% of all single-family homes nationally, which sounds small. But in specific markets, Atlanta, Phoenix, Charlotte, Tampa, that number is significantly higher. And the effect isn't just about raw ownership percentages. It's about market behavior. When a company owns 10,000 homes in a metro area and they're all being rented at premium prices, it sets a floor on what rent costs in that market. When they're competing with first-time buyers at the entry-level price point, the $200,000 to $350,000 homes that used to be the starter home sweet spot, they can bid with cash, move fast, waive inspections, and close in days. A family trying to buy that same house with an FHA loan and a 30-day closing timeline literally cannot compete. This is not a free market producing natural outcomes. This is a system that was built to protect asset holders and allowed large capital to compete directly against individual families for the same housing. Those are different weight classes, and we just let it happen.
The rigged market isn't a metaphor, it's a description. So let's bring this all together, because I think the most important thing I can leave you with today is understanding why the just wait for prices to drop advice was never going to work, and why prices aren't just going to collapse back to affordable levels even if the economy slows down. First, homeowners vote. Homeowners are the most reliably engaged voting bloc at the local level. City councils, zoning boards, planning commissions, these are the bodies that control housing supply. And homeowners, broadly speaking, vote to protect their home values. That's not an accusation. That's just rational self-interest. But it means the political will to build enough housing to actually lower prices faces enormous structural resistance. Second, builders don't build affordable homes because there's no profit margin in it. The cost of land, labor, and materials has risen so much that entry-level housing is barely financially viable to construct. Builders chase the higher margins in the luxury market, which means new supply, when it does come, often doesn't help the people who need it most. Third, interest rates are not going to fall to the 3% range that defined 2020 and 2021 anytime soon, and maybe not ever again in our lifetimes. Those rates were historically anomalous, a byproduct of crisis-era monetary policy. When people say prices will fall when rates go up, they're technically right, affordability falls. But sticker prices? Sellers would rather pull their homes off the market than sell at a loss. And that's exactly what happened. Inventory froze, prices held, the market locked up but didn't correct. And fourth, this one's the gut punch. Even if prices dropped 10 or 15% tomorrow, after the run-up of the last 5 years, we'd still be at historically unaffordable price-to-income ratios in most major markets. A 15% drop sounds huge until you realize it just takes you back to prices from about 2021, which were already out of reach for most first-time buyers. So when someone tells you the market is correcting, ask them, correcting to what? Because slightly less insane is not the same as affordable. Here's what I actually believe, and I want to be honest with you about this. The housing market as we currently know it is not going to naturally, organically produce affordable home ownership for median income Americans at scale. That would require policy changes at every level of government, a significant shift in how we think about housing as an asset versus a place to live, and enough political pressure from the people being locked out to actually override the people who are benefiting from the current system. Is that possible? Yes. Is it happening fast enough? Absolutely not. But here's the thing, and this is where I refuse to leave you in the doom spiral. Knowing this is actually useful, because if you understand that the market isn't going to save you, you stop waiting for it to. You start looking at the actual tools available to you. Down payment assistance programs, first-time buyer grants, USDA and FHA loan structures, co-buying strategies, house hacking, relocation to markets where the math still works. Not every path is closed, but you can't find the open paths if you're still waiting for a market correction that was never coming. The first step is getting clear on what you're actually dealing with. And now you are. If this video made you feel seen or made you want to throw your laptop across the room, subscribe to Rent Vent, because we do this every week. No sugarcoating, no fake optimism, just real talk. Drop a comment. What's your biggest obstacle to buying a home right now? I read every single one. And next video, we get into the actual strategies. What's working for real buyers in this market right now? You're gonna want to see it.